The Jackson Hole Symposium is coming up at the end of this week. It's one of the most important economic conferences on the calendar. All eyes will be watching Jerome Powell's speech there. And of course, it has the ability to have some significant implications for sentiment surrounding the markets and the broader macroeconomic picture. Today, we're going to discuss what is the Jackson Hole Symposium. Maybe you haven't heard of it, maybe you have. But then we'll talk about why it's going to be such an anticipated event and what are some of the different outcomes that markets might be watching for as Jerome Powell takes to the stage. First and foremost, what is Jackson Hole? So it is an annual 2-day conference. It's been going for over 30 years. It's put on by the Federal Reserve Bank of Kansas City. Essentially at its core, it brings together many of the significant minds in the economic field from around the world. Of course, there's central bankers, but there's financial organization representatives, media, many Federal Reserve bankers as well. And it brings around 120 individuals together, but the Federal Reserve Chief has the ability to speak there each year. And of course, their speech has the ability to set the tone for the economic issues at the time. So Jackson Hole at its core tries to focus on one key economic policy or one economic problem each year, and they use that period to unpack it all. So just to give you a bit of an understanding about some of these different areas that is discussed, in 2020 there was navigating the decade ahead, implications for monetary policy. As you can imagine, this was just a few months after the world was in lockdown, so there was a lot of focus on that and all of the other different outcomes. 2021, there was the macroeconomic policy in an uneven economy, and this spoke a lot to the unevenness in terms of the recovery, the different dynamics in terms of what was strong during the economic recovery and what still struggled. We of course know there was stay-at-home sectors that were really, really strong. There were some which were extremely reliant on more cyclical types of economic output that struggled and potentially are still struggling or just trying to find their feet. Goods and services trade-off, regional types of disparities as well, and so that was this focus. And then this year, the focus for Jackson Hole will be reassessing constraints on the economy and on policy. It's on the 25th and to the 27th of August. Jerome Powell will be speaking on Friday morning there. But of course, reassessing constraints on the economy and policy is quite a pertinent discussion because we're extremely focused on how we're navigating this rate hike cycle, not just from the Federal Reserve, but central banks around the world. How high will they hike to? And what are they going to do when they get towards more of a neutral rate? Will they hike through it? Will they wait? Are they going to take more of a wait and see approach? We know inflation's that core focus at the moment. But of course, I've got to navigate that growth trade-off too. And so the focus this week is going to be on how high potentially rates may go, but also how long they will need to stay there. Because of course, it's not just about how fast we'll get there. They want to get there expeditiously, potentially front load, at least front load as fast as they can from here. The question about whether they started too early or too late, that's another discussion outside of this scope. But of course, what happens there? We know the markets over the past period, we've seen the 10-year yield coming down quite significantly. We've seen the 2s, 10s inversion continue on. And so the question will actually be, what's going to happen on that dynamic? This here is the latest Fed dot plot that we got in the June period. We see well over 3% there, closer to 3.5% for the medium for 2022, a little bit higher to 2023, closer to mid 3 3/4 there, before rates coming down to 2024 and into the longer term settling in around that 2.5% mark. But there are a few remaining questions, of course. They won't all be able to be answered at Jackson Hole, but these are some of the core questions that the markets have. Before we think about these, make sure you've subscribed and turn your bell notifications on. We talk about all things markets and macroeconomic trends. We'd love to have you join the community, so welcome if this is your first time. First question, inflation. Have we seen peak inflation? As we know, we had the 9.1% print. Last month was 8.5% print, extremely elevated, well above the 2 to 3% band that the Federal Reserve wants to sit at. However, have we seen the peak inflation? And if so, how quickly will it take to get us to more normalized conditions? Secondly, on the rate rise front, we know the September Federal Reserve decision is inbound. Of course, there was no decision this month. We know initially potentially 75 basis points was a consideration. The market pricing mechanism started to come down closer towards the 50 basis points. So it's anticipated that 50 may be the go. But of course, we'll be watching to see how hawkish or dovish Jerome Powell's words are at Jackson Hole. That'll give us a bit of an insight into this hiking cycle. In terms of growth, first and foremost, we've seen rates going up around the world. How will consumption fare? So far, consumers have been resolute. There's still spending going on, eating into the household savings rate, but we're still seeing a relatively strong labour market as well as demand. But the question is, can they navigate a soft landing? Of course, we know it's difficult. They don't want to be hiking into weakness, but we know that monetary policy operates with that lag time, as we always discuss. And so that means that potentially rate hikes now may start to have an effect on the demand side moving forward. They want to navigate that soft landing. They want to be able to continue to support that economic recovery, though of course bringing down inflation, because inflation, it is that regressive tax that of course affects disproportionately low income and middle income earners across the economy. Hope you've enjoyed the video. Drop in a comment, let us know your thoughts. We'll continue to watch what happens at Jackson Hole. Big thanks for joining us. For now, stay well and happy investing.